These two simple criteria will help you confirm a trap on any Forex pair. In this video, I will share the 1-minute checklist to never get trapped in your trade again. Here's how you can confirm a bullish trap. First, the price should test a historic liquidity supply zone. Make sure that when the test occurs, the candles strictly close within the liquidity zone or below that. A bullish trap will be the upper wick above the liquidity zone. And usually this upper wick will be long in comparison to a body size. And the second condition is a formation of a selling imbalance candle. To confirm a selling imbalance, I suggest looking for a bearish engulfing candle, the one that engulfs the entire range of a previous bullish candle with its body. When the price tests a liquidity supply zone, closes within or below that, forming a long upper wick above a liquidity zone, and then forms a strong selling imbalance candle, our two criteria are met, and the bullish trap is confirmed, and we can anticipate a bearish movement. Let me show you the example. I found the confirmed bullish trap on a pound-dollar pair. You can see that we have a significant liquidity supply zone here, and the market has recently tested this supply zone. You can see that all the candles that tested this supply zone strictly closed within that or below that. Then you can see that one of these candles formed a long upper wick, and you can see that with this long upper wick, the price violated a liquidity zone. Learn smart money concepts SMC trading with my book. For more info, check the link in the description below. The book is also available on Amazon. I do believe that it is a bullish trap because after a formation of this long upper wick, the price formed a bearish imbalance candle. We have a confirmed bearish engulfing candle, and I think that there's a high probability that the price will continue falling now. I make that prediction using our two simple conditions. And here's how you can confirm a bearish trap. First, the price should test a historic liquidity demand zone. The candles should strictly close within or above that. Remember that none of the candles should close below the liquidity demand zone. It is a very important rule to follow. By a bearish trap, we will call a formation of a lower wick below a liquidity zone. The second condition is a formation of a buying imbalance candle. To confirm a buying imbalance, I suggest looking for a bullish engulfing candle. When the market tests a liquidity demand zone and candle closes within or above that with a long lower wick below that, and then a buying imbalance candle forms, our two criteria are met and the bearish trap is confirmed. We can anticipate a bullish continuation then. Let's check the example. Using our two-step checklist, I found a valid bearish trap on silver. You can see that here we have a historic liquidity demand zone, and we can see a recent test of that liquidity demand zone. We can see that all the candles that tested this liquidity demand zone either closed within that or above that. Then we can see that here this bearish candle formed a long lower wick. After a formation of this long lower wick, a bullish imbalance candle was formed. And according to our rules, a formation of a bullish imbalance candle confirms that this bearish movement right here is a bearish trap, and we can expect a bullish continuation on silver now. A correct identification of traps is the core in decoding the actions of smart money. It will help you identify a good entry or avoid a false signal. Let me know, traders, in the comment section, what do you want to learn in the next videos? Learn smart money concepts with my book. For more info, check the link in the description below. Also, traders, please watch my other videos.